Hi everyone, good to have you here. This is E Plus Academic Resource Center, okay, where we take online tutorials from the graduate and senior secondary students. Okay, so we'll try as much as possible to round up today's class, okay, on the subject we have been looking at. This is the part 3. We have started for some weeks ago, okay. We have done part 1. I'll share the link to the previous videos in the description section so that you go through it, okay. So we're going to continue from where we stopped the last class, okay. So we stopped at net profit, okay. So we'll continue. Let's see, is there other income, comprehensive income? Okay, we have following the recommendations of a professional valuer, Mr. Chinedu intends to revalue freehold premises at 60,000. Freehold premises in the trial balance is freehold at cost is 46,000. So Mr. Chinedu is revaluing it at 60,000. So let's add other comprehensive income, okay. So so we have freehold premises gain, okay, on revaluation, okay, of freehold. I'm just shortening it because of space, okay. Let me use gain on revaluation of freehold premises, okay. So this is how we got it. We'll now do 60,000 minus 45. How much is it on the 46,000? Okay, 60,000 minus 46,000 will give us 20. Let me be sure. 60,000 minus 46,000 will give us 14,000. Okay, so when we add this to our net profit, okay, plus 23,479, it will give us 37,479. So these are our total comprehensive income, okay, total comprehensive income for the year. These are total comprehensive income for the year. Are we all together? Okay, so let's go straight now to the final part, which is the statement of financial position. Okay, so we start E plus enterprise. This is how your heading will be like. Statement of financial position as at, not for the, as at the year ended 31st December, is it 2008? Yeah, 2008, okay? 31st December 2008. So the part we've done with now is the profit or loss and other comprehensive income. Now this is the statement of financial position, also known as the balance sheet. Do you understand? Are we together? So let's flow. So here we're going to have three. Here we had 2 naira signs. So here we're going to have 3 naira signs, and this naira sign, they are going to serve as we have costs, accumulated depreciation, and net book value. Costs, accumulated depreciation, and net book value. We are using these 3 columns because of fixed asset, also known as non-current asset. The old name used to be fixed asset. The new name is non-current asset. When we say non-current asset, we mean fixed asset. It's the same thing. Okay, so let's have our non-current assets, also known as the fixed assets. Okay, so our non-current assets, you already know what non-current assets are. I'm still going to, I think we did a class on those to explain those terms. So I'm going to share the link in the description section so that you have to go, so that you go through it as well. Okay, so we have the first one here, freehold premises. Freehold premises, okay? The cost now is 60,000. Remember, we revalued. I revalued, okay? Check your additional information, you'll see it. Freehold premises value revalued at 60,000 naira. No, there was no depreciation on freehold, okay? You bring down your net book value. Then the next asset, non-current asset we have here is motor vehicle. Motor vehicle, okay? Motor vehicle here at cost is 12,000, okay? Then depreciation, if you check the trial balance, we have provision for depreciation on motor vehicle 45. Then on the additional information, we have depreciation on motor vehicle as well. Where is it? Charge depreciation on non-current asset as follows. Motor vehicle 10%. So we'll add the one from the additional information and the one from the trial balance together. Do you understand? Now the one from the additional information is 10% of motor vehicle. 10% of 12,000 is 1,2. Okay, so 1,2 now plus the provision here is 4,5, which will give us 5,7. Do you understand? Accumulated depreciation. The depreciation, if you check your trial balance, check it there, you see provision for depreciation on motor vehicle 4,5. Then if you check your additional information, you see motor vehicle 10% of cost, provision for depreciation 10% of cost. Now the 10% of cost, you add it with the one here, the provision for depreciation on motor vehicle here, 4,5. Okay, when you add it together, that's your accumulated depreciation, 5,7. So deduct 5,7 plus from 12,000, 5,7, 12,000 minus 5,7 will give us 6,300. Okay, now the next non-current asset is furniture. Furniture, okay. Furniture at cost here is 2,5. Okay, depreciation here is 1,000. On the one on the trial balance is 1,000. Then the one from the additional information is 20%. So 20% of 2,5, 0.2. Sorry, 0.2 times 2,5. That is 500. Okay, so you add 500 plus 1,000. That will give us 1,5. Okay, so 2,5 minus 1,5 will give us 1,000. Hello, are we together? Are you seeing what I'm doing? This is the cost of your fixed asset, accumulated depreciation, and net book value. We are using accumulated depreciation because we have multiple depreciations, both from the trial balance and the additional information. If it was just depreciation from the trial balance, we will just say depreciation, but we say accumulated because we have to add all depreciation, both from the trial balance and the additional information. We have to add them together to give us accumulated depreciation. Then this is our result, net book value. Net book value is gotten by deducting accumulated depreciation from the cost. It will give us net book value. Are we together? All right, ask your question in the comment section. If you don't understand, let me know where I can respond to you, okay? Am I too fast? All right, I'll take it slowly. We're almost rounding up, okay? Are we together? Okay, so we'll have to add this together to give us our total, okay? When we add this 60,000 plus 63,000, let's see, 60,000 plus 63,000, 6,300, sorry, then plus 1,000, that will give us 67,300, okay? So I am using these parts. When I finish with these parts, maybe I'll turn over to the other side, okay? So that's for our current non-current asset. So let's come to current assets now. When we say current assets, these are assets that can be turned into cash within 1 year, okay? Within 1 year. All right, so the first year we'll have our closing inventory. Closing inventory. When we say closing inventory, we simply mean closing stock. It's the same thing. So that should be in our additional information, 31,800. 31,800. Then the next we'll have our receivable. Receivable is something as debtors, okay? Receivables. Our receivables here, we have 45,000, okay? 45,000. Now, remember I told you when I started, I said bad debts, discount allowed, they are all affecting the receivables account. They are affecting the receivables account, just like drawings are affecting the purchase. Goods withdrawn affects purchases. Goods withdrawn affects purchases. Same way, discount allow, bad debt, provision for bad debt, they affect receivables account. Do you understand? So we are going to deduct those provisions from the receivables account to give us our net receivables. Are we together? So provision for bad debt. Now remember, we increased provision from 200 to 900. Do you understand? We increased the provision to 900. So we are going to deduct 900. Okay? There's another provision for discount allowed. Discount allowed. Okay? Discount allowed. That was 441. Yeah, if I'm not mistaken. Do you understand? That was 441 from additional information. If you have been following us, you understand where we're getting these figures from. Are we together? Okay, so we're going to add this to give us a figure here. Let's do the calculation. Let's deduct this and this from this, okay, to give us our net debtors. So we have 45,000 minus 900 minus 441, which is 43,659. 43,659. Are we together? Okay, permit me to wipe this off, okay? All right, so let's continue. So we have current assets, okay? We still have prepayments. Prepayments are current assets, okay? Prepayments, prepaid expenses, they are current assets. So we have two of them here, prepayments. Prepaid expenses, they are current assets. We have, from the additional information, we have 400 for insurance, then 500 for general expenses. Okay? Please don't forget, prepaid expenses are current assets. Then we also have accrued income. Accrued income, that is income that they are income owing. You know what we mean by accrued income? When they are owing you income, it's an income, it's a current asset. I've explained what current assets are, what non-current assets are. I'm going to share the link so that we can bring you up to speed. So we have accrued income, okay? Accrued income here is 800 naira, okay? 800. Then what other non-current assets? Let's check our we are done with this. We are done with this. Cash at bank and cash at hand. Cash at bank. Okay. Cash at bank, we have 5,000. Then cash at hand, we have how much? 1,900. Are you following? Do you understand what we're doing? Please use the comment section, ask questions, okay? Where you don't understand. You can also reach me. Our WhatsApp number is there. Our social media handles are there. You can also reach out to us if you have any reservation. Are we together? So we're going to add this together, okay, to give us what we're going to add to this. Remember, this is from our fixed asset to our non-current asset. So whatever we get is going to be our total or our net assets, or let's say total assets. Total assets, okay? So let's add together. So we have 31,800, 31,800 plus 43,659, 43,659 plus 900 plus 800 plus 5,000 plus 1,900. Okay, that's 84,059. 84,059. So add it to this. Okay, plus 67,300. 67,300 151,359. 151,359. These are our net assets. Are we together? These are net assets. So the next one will be liabilities and equities. Liabilities and equity. So that's our net asset. So we're going to continue. Are we together? Are we following? Is it making sense? All right. Hit the notification bell to get notified when we drop another interesting class like this. Okay. Invite people to be part of what we're doing. Are we together? Let's proceed. All right. So here we have opening capital. Okay. Opening capital. Our opening capital here is what is our capital? 70,000. Okay, 70,000. Are we together? Then we'll add our comprehensive income. You know, after we got our net profit, we added gain from revaluation of our asset to get our total comprehensive income. Do you remember? So we'll add that total comprehensive income. Comprehensive income for the year. I think that was 37,479. Let me move this one here. 70. That is this for our capital. 70,000. Okay. Then when you add total comprehensive income, it is 37,479. 37,479. Okay. When you add it, it will give you 70,000 plus 37,479. 37,479. That is 107,479. Okay, are we together? Okay, let me wipe this off. Sorry. Okay, so we are continuing from here. So here you less what? Less drawings. Drawings. Remember the drawings from our what is it called? From our trial balance is 14,100. Okay. You add the drawings from the goods withdrawn. That is in the additional information. See it. Goods costing 1,2 were taken by the owner for private use. They are all part of drawings. This one is cash withdrawn. The other one is goods withdrawn. So they are all drawings. 1, 2. So add all of them together. It will give you 14,000 plus 1, 2 will give you 15,300. Let me be sure so that we don't do double work. 14,100 plus 1, 2. 15,300. 15,300. So when you deduct 15,300 from this, it will give you equal to minus 107,479. 479, 92,179. 92,179. So this will be your owner's equity. This is the owner's equity. So we continue. Current liabilities. Okay. So the first item on our current liability will be our creditors, or we call them payable. Let me not use the old name. Let me be using the new names so that you will be familiar with them. Okay. So our creditors, we have 57,100. Okay. 57,100. Where is it? 57,100. Okay. So we add accruals. Accruals. Let's see. We have two accruals here. Accrued expenses. Okay. 1/8, then the other one 18 naira. Accrued expenses. They are liabilities. Remember, you are owing accrued expenses. 1/8 plus 80. Okay, that will give us 1,880. 1,880. Okay, let's see another one. Do we have rent received in advance? Is a liability. Okay, because you are receiving money that is not yet due. You are receiving a payment, like a You are receiving a money. Let me put it that way. You're receiving a money that is not yet due. Somebody's rent is 2025 and the person has paid you in 2024. So it's a liability to you because when you get to 2025, you have to use your own money to cover up. So it's a liability. So we have rent received. Rent received, okay? How much? 200. So you add. I think there is nothing again. There is nothing again. Okay, let me see. We're going to add this together. So we'll have 57,100 plus 1880 plus 200, that is 59,180. 59,180. So when you add these two together, plus 92,179, 151,359, 151,359. Is that the same thing we had in our total asset? So check. If this amount is not the same with what you have in your total assets, remember when we had total assets here, your statement of financial position must balance. The equities and liabilities must have the same figure with your total assets. The equities and liabilities must have the same balancing figure with your total asset. If it doesn't, that means there's a mistake somewhere. So cross-check. All we have been doing, our total assets and our liabilities and equity, if they are the same, check. If they are the same, that means we are 100% correct. If they are not the same, that means there's a problem from the beginning, somewhere from the beginning. Are we together? All right, that's that about this class. Have you enjoyed the class? Are we giving value? All right, thank you for staying. If you have not subscribed, please subscribe. It doesn't take anything. Invite people to be part of what we're doing, okay? Share this video so that people who need it can also benefit from it. Do you understand? What we're doing here is practical. It can be applicable in real life, okay? If you have a good understanding of financial accounting, it will help you a lot, a great deal. It will help you. Trust me on this one. It will help you. Just follow us patiently as we move along with us. Ask questions where you don't understand. Use the comment section, okay? Ask questions. We are here to answer you and give you feedback, all right? Thank you. It's been a long class from part 1, part 2, part 3, and we have come to the end of final account of a sole trader, okay? Thank you for staying. See you in the next class. Bye-bye.